Hello guys, glad to have you on board again. Today we're going to talk about the Pro Framework indicator. It just got released a few days ago and I thought we might need to make a quick video out there to just explain what the indicator is, what is plotted on your chart, how to use it, basically sum up the basic information, how to set alerts, how to properly use it inside the strategy. First we're going to make a quick introduction because you might have noticed that lots of things are changing right now regarding what you have in your charts available on the public versions and what I have on my charts because I'm really changing the way the overall strategy is going to be displayed. It's now going to be just the framework indicator on the chart and the oscillator version that is kind of a mix between momentum and sine waves. So you now have some of sine waves algorithms built in directly in momentum and some part of other sine waves algorithm are going to be joined to framework. So in the future I expect us to just use those two indicators, the framework versions and the momentum version, and obviously sine wave is going to disappear, but not just like that. It's not going to vanish. It's just those algorithms will be included into both momentum and framework. So it's still going to be the same thing. The strategy itself isn't going to change at all. The algorithms remain mostly the same. The strategy behind it remains the same. We're still trading interesting prices with a risk limitation done by both momentum and cyclical sine wave analysis to trigger risk management. To trigger low risk entries, basically. All right, and you'll still have multiple options, multiple degrees of aggressiveness to the trades. You'll still have the exit, the bearish, the bullish structures, anything that suggests you can buy, sell, or just partial taking profit on those areas. So still the same things. It's just I thought it was a little bit too complicated for you guys to read this, and mostly as you needed that technical framework indicator to get better at taking care of step 1 and 2, which is still the same, taking care of the context and finding a technical framework to trade on. So now that you have this, I think this indicator is kind of overwhelming the chart version because now you have multiple information on the charts and adding sine wave on top of it seems a little bit too much to me. So this is the only thing I'm changing right here, the way it's going to be displayed. So it's a process going to take a few weeks starting now. So now you've got framework, which is step 1 of that major update. A few days from now you should have momentum versus 1.5, which is a big update, and I may even name it momentum version 2.0 because it's clearly a different thing in here. I've been reviewing lots of the patterns to change their strength and of course have a sine wave validation in there, so it's really a different thing than the previous versions. And the final step is to include the breakout patterns that were previously into sine wave that is going to move into framework, and then on top of it in the future, and I don't want to give any release date for this, I'll probably eventually consider giving you the pro signals. It's going to be adding information and making the connection between this, and subtly going to highlight where you have signals to trade. But it is not to trade automatically. It's never been meant to this. And all those of you who might think that, okay, I'm just going to trade those signals because they seem pretty damn perfect, then if you really thought about that, then I might think it twice. Okay, I'm not yet sure about releasing that thing because I know how it can be used. Even though I stand hard on this, it's not possible to make automated trading. Okay, you still need to verify the trades. I want you to use that tool whenever it eventually will be released only for alert purposes and only this. All right, it really is for you to put alert system on there, and when the alert shows up, you go to the chart, you verify information, you make sure the risk is limited, and eventually at that point you take the trade. All right, so we'll see on that, but this will be the final step, and you should necessarily This one is really early building right now, so can consider it alpha version. So don't expect this to be released until probably Q2 2019. All right, so this one is going to be in long run, but anyway, you'll have more than enough to work with just the new versions of FrameWork that will show up probably early 2019, and that new version that will show up pretty soon on Momentum. All right, now back to essentials, what the FrameWork indicator is and how to use it. So I'm going to give you a few tricks to get the best out of here. Okay, so first we're going to explain what is displayed. Okay, so number one, we've got the context channel. Normally you already know about that. I bet you already heard about it. So the context channel is basically the major framework, and it's going to give you boundaries not to trade beyond, which means when you're reaching out the upper boundaries, it's for you can't just buy. All right, you're not buying that area, you're only buying potential pullbacks on the trend channel that we're going to talk about, and you're looking at buying entries only when you're at the bottom of the context. Okay, so top of the context, selling onlys, bottom of the context, buying onlys, and certainly not doing the opposite. All right, so it's going to prevent you from making stupid decisions of selling a bottom and buying market top. You're no longer going to be doing this. It's not possible. All right, so make sure of it. If you ever press the button in here and buying in that area, you just got it all wrong. Okay, you're going to do it in some certain conditions. It's going to be breakups, and they're soon to come. For now, you don't have them. All you can do is buying the bottom of the trend line. Okay, so context, and you've got trend channel as well. So two different time frames. Consider it as the short-term trend and the bigger picture trend. Okay, so you're never trading the bigger picture trend. You're trading reversals on the big picture using the shorter term time frames channels. Okay, which we're going to call the trend channel and context channel. So now and for all, we're going to use those words into the video. So when I'm talking about the context channel, you need to know this is what I'm talking about, and the trend channel is going to be this one. All right. So you're also going to have automatic Fibonacci retracements, pretty useful to highlight a horizontal level, and it's basically summing up all those three informations that's going to give you a reliable trading interesting price area to trade. Okay, so now how do we do it? It's going to be a simple checklist. All right, checklist really simple. When I say in here highlight interesting prices in pro frameworks, basically following the previous step 1 and 2, which is going to be identifying the context. What kind of market are you trading? Is the market trending? If so, is this early trending or late trending? And I'm going to give you tips to answer that question with technical information, so it's no longer be something that you may wonder. Okay, it's not going to be wondering things anymore. It's just going to be using cold facts to answer that question. All right, so the context, trend, early trend, late trend is the question you should answer to. Are you ranging? Okay, are you trading in ranges? Are you trading bubbles or crashes? All those markets will have different plotting on this indicator. So if you have doubts, if you just don't want to make yourself confused by the prices, you can just hide them. And I strongly even recommend most of you guys who are really having a struggle to identify the context, you just do this. You right click and you set hide the price. And by just looking at the trend channels in here, both the context and the trend channel, you should be able to see what's going on. Just like that. You don't even need price anymore, actually, because this is going to sum most of the information on prices. So how are you going to recognize a range? A range has a really easy, simple structure. You're going to see large boundaries, okay? You're going to see really large context lines, not nearly heading somewhere. They're basically, prices are going to oscillate in there. They're eventually going to try break a boundary, but they're going to fail it right after and retrace to the other boundaries. Okay, generally you'll see that the trend channel in terms of size is big compared to the context. Okay, they are both very large, and when they are both large, means the market doesn't necessarily want to know. It's gonna knock on each and every boundary, top and bottom, until it finds out a possible direction. Okay, this is clearly the range context. So we're still ranging right now. It's not trending. Trending is clearly this: when you will see prices on top of the trend of the context, maintaining themselves in here with a trend channel that stays itself on top of, let's say, half the context, okay? You will remain on the upper 50% of the context channel. Any pullback is rapidly bought. We're building a short-term range on the trend channel, and then we'll restore the bullish trend. Okay, so that's how you see bullish trends. How are you going to see early stage or late stage bullish trends? Early stage is going to be shown by the bottom side on bull trends, and the top line on the bear trends. Early stages, you'll see things like that. Okay, you'll still see the big boxes suggesting we're still in range in here, and we're starting to trend in there. And you'll see the boxes getting a little bit narrower, and you'll see this. On the top channel, you'll see the breakups. This is really signaling the attempt of a trend. And then at that stage, you'll see if the trend fails, means you're still in ranging. If the trend sustains, means you're trending. But normally, when you see this, the bottom line starting to rise already, means that this is early trending. The market starts to trend. It tries to get to trend. It can make some pullbacks to that area, but normally it will be attracted like a magnet to the upside. Then you see the breakups. So this is pure trending, early trending, trending when you see those breakups. And late trending is going to be showing this. When you see the bottom boxes getting thicker, getting thinner, and when they stop lining up each other. When you see breaks into the lower channel, means you're late stage trending. Generally, this is when the market tries to make the final breakups and it's already exhausting itself, so it's too late to get in. You're not trend trading in there, you're trying to search for reversal, okay? So you're trying to sell the double bearish like we had out here, okay? And basically, you can even have the best ever strategy in here by just not even looking at the prices. You've got the signals, you've got the price structure, and you just don't even need the price. So, no, that's funny. Obviously, you're going to need price. But if you're really struggling at identifying price structure, you can ease yourself doing this. You're just hiding the price as long as necessary. To turn back the price on, you just go click in here, and you reactivate price. Okay? God damn it. Obviously, otherwise it's in the bottom in here. Okay? And you can reactivate prices. All right? So there you go. Make sure you're always going to trade near the context. Okay, that is how it goes for trend. When it is trend trading, you're not going to try to buy the bottom of the context, because trending suggests we won't go there until we terminate the trends. Okay, or ranging at the end of the trend, which we're doing right now. Okay, so what you're going to do when you see that trend is that you're going to buy any double signal that pulls back to the trend channel. Okay, trend channel, you buy at the trend channel. That's easy. And second thing you might wonder in here is that when you have this, you need to be clearly knowing that this trend channel is another time frame's context. But you're always going to trade in the context. So when you see that trend, you know that you're not going to trade in here. You're not going to trade on that daily chart. Whenever you are in there, you are going to trade 2 hours. You're going to go to the lower time frame chart right in here, and basically you're going to try to buy any pullback on the context, buying in here, buying in here, buying in here, until you got late stage trending on the daily chart. But what you see in here, that context channel, is the daily chart trend channel. Okay, when we made those pullbacks is what you saw earlier. All right, so you need to assess multi-layering. You're always going to trade in the context. So when you have an interesting trend channel to buy, you're just going to switch to the lower time frame to be more aggressively buying in here, but you're going to spare, you're going to keep open positions following the daily trend. Okay, it means in here you're going to take the 2 hour trades, you're going to manage your risk on the 2 hour chart, but you're going to make sure that you leave 50% of that trade opened to play the daily trend. Okay, that's the only difference. All right, that's how you trade trends. You follow the trend and you keep some half of the positions open as long as the trend is at play, and until you reach out to the late stages of that trend, and you're obviously going to take all your gains out at that stage, even if we had a nasty bubble afterwards, and we're going to talk about that right after. We're going to delete the prices once again, or hide the prices. This is how you highlight bubbles, okay? You see? Trend channel is going to be like a wedge, okay? It's going to build wedge channels, okay? Channels that are converging, but both going to the upside. When you see this, like looking like a parabolic SAR, stop and reverse, you see it's getting really parabolic. The bottom line is rising fastly. This is crazy fucking bubble prices. So when you see this, you trade with a bubble context, which means you're really patient, you're waiting for the tipping point in psychology. When people are buying for no reason, you just wait for a damn bearish signal, you get the fuck in, and you trade for a crashing reversal, all right? So this is how you highlight bubble, when the bottom line that follows the trend is rising parabolic, okay? When you see this, the algorithm is built for detecting this, and it's going to follow as well. So when you see this, you know, obviously, that this is far different from this. Okay, really, this is bubble, no questions asked. All right, so this is how you use context channel and trend channel to highlight price conditions, okay? And then you've got the Fibonacci retracement is going to take care of helping you trading inside ranges. So for example, we're going to go in here, okay, we're going to go replay. We're going to go back there because I don't want you to see and know what was happening back then. So we're going to talk about this, which is 50% lines, okay? It's an indication that is set off by default, but you can turn it on. Okay, it's in here. You can delete it. It's turned off by default, so you can set it on. It's basically gonna draw the 50% lines of both channel. This one is 50% of the trend channel. This one is 50% of the context, and it's colored according to the direction of the context. And it's gonna help you, meaning really you can delete the prices and trade really safely because you're just gonna trade interesting prices no matter what. You just don't need the candles anymore, basically. I strongly recommend you to keep those candles, but if you're struggling, really delete them. You're going to make much better analysis, not even showing the prices, okay? So, and if you delete the prices, make sure you're using this, which is the 50% lines, because they're going to help you identify. When you've got this, still a bullish trend channel, a bullish context, with a bearish and strong bearish reversal on 50% line in here, you know that a range is going to build up, all right? So at that stage, you're going to use the Fibonacci retracements, okay? So look at them. They've been automatically plotted. The market says that you're probably going to retrace to those targets, which is 23.6, 38.2, 50%, 61, and 76.4 or below. And they are plotting to retrace the big trend. So the indicator has been detecting that you need, or the market is probably trying to retrace. So what you do is when you reach out to those prices, okay, for example, back in here we were trading 227.16. Let's say we go forward, but this is where the prices matters. Okay, so we should have gone a lot more back in time. But this is obviously where you should have bought 23.6 retracement. Near that area, you're trying to support prices. You're trying to buy the dips out of this level with a stop loss below 38.2. Okay. And you're basically trying for the market to build its range. And whenever it has built its range, you'll see it clearly. I don't even know what the prices are doing right now. Okay, I'm just moving. All right, you see conditions are going to change. All right, now you have what? Bullish trend channel, bearish context, still suggesting you're fucking ranging. When you see this, first thing you do, you've seen the Fibonacci's have been updating. You know how to trade ranges. Inside ranges, you trade below 23.6 and above 76.4. You don't trade in between, and especially not into the DOM area. All right. So right in here, you've got the range setup. The range setup set it automatically for you. It's just the easiest fucking way to trade. You wait for prices to get in here. And whenever you are in here, if you have a double signal coming from sine wave and momentum, you just get the fuck bearish at the top of the range, which is exactly what the market has done. Rising, rising. Oh, we're nearly reaching the prices. Okay, we're right here. Look at the price. Let's figure it out this way, okay? Just waiting for prices to reach out that area and triggering a double bearish. Okay, double fucking bearish. You're trading bearish right now. You just go bear, you target taking profit number 1 at 61% retracement, and 76.4 is going to be your taking profit number 2. You just wait. Don't even see the candles right now, okay? Oh, you're taking profit number 1 and number 2. How perfect is that? You just traded a range smartly, and you've been assisted by the algorithm, which just now updated again. Okay, now you're back into potentially retracing further, so you should even have tried to target that level back then. All right, but that's how it goes. You've got Fibonacci's automatically updating themselves, trying to figure out what the context is and trying to figure it out. When you see this, both 50 lines oscillating one next to each other, really you've got the range. It is how it is. You're going to trade this, all right, and you're just going to wait for this to play its game, okay? So this is how you do trade ranges. This is how you're going to highlight trends. It's going to be easy. And as I said, you don't even need the prices to figure this out. You just go in here, watch out for this. If this isn't a trend, I don't know how to call it. You've got strong trends, strong trend channel, strong context. How the fuck do you want to sell in there? You're not selling. All you can do is to use the selling signals as profit takings. That's all you're going to do. Okay, you wait for late stages of the trend. Let me just play the games one by one. Okay, we're just going to make it like that, all right? Watch out for this. Oh, do you see the boxes on the bottom? Now you see the trend is reaching late stages. Okay, so you wait for a first pullback, and the next stop is going to be where you stop. Right there, you got the pullback. You seen that trend channel? Trend channel is now getting bearish. So you see a consolidation right now is ongoing, but the overall major trend remains strongly bullish. So we're just consolidating in here. You're still buying the fucking dip at that stage, but you know the next one is probably okay, trending again. How easy that is, all right? Now, late stages. So the next bearish signals you see are going to be signals you sell. All right, get the fuck out of here. You've got the double bearish in here, exit. Everything suggests you need to exit that trend. Probably range. You know what's been happening afterwards. The market kept following and went to create that nasty bubble trading. Okay, in here you clearly see bubblish extensions, so you wait for a clean, nasty exhaustion of that momentum, and whenever you have it, alright, fucking exit. You knew you had to go fucking bearish in here. Alright, go bearish. I don't even know, but I would have been bearish in here targeting this, which is the previous support box. And guess what? This is exactly where we've been going. So yes, that's how it is. That's how you can trade really safely, and you don't even need to have a fucking look at the prices. So I suggest you really need to look at prices for one reason, because prices can be irrational, can be erratic, and whenever they are, okay, you really need to see them, because it's important to use step 3, which is verifying how the trend is, what the prices are, how the prices are behaving. You know, when you will see at some time some strong bearishness, some strong volatility showing up in a stock or something, you really need to see the candles. But if you're struggling to, first, before making your analysis, don't bias yourself. Just hide the prices, make a context analysis, make sure you're trading interesting prices, wait for a signal, and just before you take the trade, you go back to plotting the candles and see if there's nothing unusual in the price action before it. Okay? Anything unusual, you just don't take the trade. Whenever there's a doubt, you just get the fuck out. There's so many opportunities out there. Doubt is no part of what you can trade. All right? So that's how it is, and there's a final little stuff that I'm going to talk to you about. So we're going to hide prices again, because I wanted to offer you an even sharper risk management in here. So you're going to have the opportunity to have this thing. It's turned on by default. I just deleted it for the French users. That's how it is. It's basically an even shorter time frame. It's going to help trend traders or low risk trader to consider this as a validation. Basically, you've got the algorithm running on the background on big time frame, running on an intermediate time frame. You're going to have a shorter term time frame. It's going to be this. I've been calling it the scalp. So when it's going down, you know prices are going down as well. Okay. Following. See this? Up, we broke it up, which means we've been reaching out that price and we're now rising back again. Okay. Let me show you how it goes with prices. All right, and if you got it right, did you really? I hope you did get that, but I said, okay, time frames are like layers. All right, so this is 2 time frames lower context. So if you want to trade this, you go 15-minute time frame. It's going to be your context. Okay, let's switch. For example, let's go real time. Okay, and you'll see it a lot more clearly. Right now on the SPX, all right, this is where the context is on the scalp context. All right, and if you go 15 minutes, you're going to find that context in here. Okay, so if you do want to trade this scalp level, you're going to trade this in the 15-minute context. So in 15-minute chart time frame, and you're going to trigger with 15-minute signals as well. Okay, but that's how it is. You can use that because this is going to be an even more aggressive kind of signaling, which basically you're going to have a sense of what's happening 2 time frames lower than yours. Okay, so guys who are trading intraday in here are going to try to trade next to those prices. So when you see the price trying to cross them, you know that the short-term traders are probably going to try trading, supporting the prices or trying to break the trend lines or anything like that. But there's going to be short-term activity near them because this is where you're going to have the 15-minute context signals. All right? So you really have 3 time frames going in there in a single chart, and I think this is not overwhelming in terms of informations, and I think I made it as easy as it's possible to make you understanding what the market really is about. It's not magical. You're never gonna know what's happening. Remember, it's chaos theory, but you're gonna just try to figure something out and limit the risks. That's all we're doing here. You're not trying to understand the market. No one does. The thing is that you're just going to make sure that at least you're trading at interesting prices, price that matters, and that finally you're going to limit the risk using the sine wave and momentum algorithms to make sure that there is a potential for other traders to sell or buy like you're doing. That's all we're doing. The rest is the market is going to choose if it proves you right or wrong, and this is nothing you fucking give a shit about. All right? We're not here to be proven right or proven wrong. Obviously, it's much better when you're proven right because you're going to take gains. But all we do here is not playing magicals. It's just limiting the risk and taking fucking trades. All right? So I hope you guys have been understanding what the point is here. I hope the tips are helping you. But before we get it over, we're going to have to talk about alerts because it's going to be the best ever part on that indicator. Means that as it is an indicator, you're going to be able to plot alerts on this. On everything that shows up on that chart, you're going to be able to set alerts. So let's say, for example, let's take quick practical examples. I said, when you apply the strategy, you highlight interesting prices area of framework, you wait for price to trade signal in those areas. It means this waiting part is probably what's going to take most of your time. Most of the time, you're just gonna freaking wait for something to get to interesting prices. So how do you do that? You've got multiple options. First options, you wait in front of your charts, you watch out for every candle, real time following the market, exhausting your eyes, and moreover, putting yourself into very dangerous situations of overtrading and anything like that, which means at some point after watching so many candles moving into uninteresting prices, you're gonna think that you have to do something. When you'll see a strong bullish candle or bearish candle, even if it happens into uninteresting prices, you're gonna say, okay, I'm missing something. So you're just gonna making over trading situations in here, which is the worst ever kind of trading. So you just go out of there. If you've been subject to over trading, this is the best way ever to get the fuck out of here. Use the advantage of those indicators, set alerts, and get the hell out of this chart. You wait for the alert to trigger. When the alert triggers, you move on to the next step. You set alerts on sine wave and momentum to make sure that you're gonna have a signal to trade with. And this is basically, it's gonna change the way you trade. Now back then you were used to wait for prices to get into interesting prices area, but you couldn't resist to look at the prices every time. Either it's on your cell phones or sticking in front of your computer all day long watching for charts. That doesn't matter. All right. And actual working at trading shouldn't be taking more than 5 minutes of actual working. Getting in a chart, highlighting a potential, setting an alert, waiting for prices to reach out that potential. When it does, you go in the chart, you verify information, you set an alert on a signal. So when you're interested in pricing, you wait for a signal to show up. No signals, no trading. So you just put an alert, get the fuck out, wait for the alert to trigger. The alert triggers, you go back to the same chart for the third time, you verify the trade once and for all, you define the money management, where is going to be the stop loss, how much money are you going to put in there, but depending on the overall risk, and what are going to be the potential targets. You set alerts for risk management, you take the trade, and you get the fuck out. When the alert triggers for the risk management, you set the stop loss higher, you take partial profits, you do whatever you want, and you get the hell out again. Which means, normally when a trade is taken in, from the very starting point you got the idea of trading to the point you're going to take the profits or even being stop lossed, it's going to happen. Normally you shouldn't be spending more than 5 minutes actively trading. The rest of the time is them waiting, and waiting is not going to change anything. So just don't stay in front of your computer. All right? We're going to take a quick example of taking a trade. We're going to take, for example, how to trade this one. Okay? So it was 28th of June, and we needed to take that trade in a 2-hour chart. Okay, so remember that in that context, 28th of June, we needed to get in right in here. Okay, so we needed to buy in the context. So what would have you done back then? You would have gone, for example, in here. Okay, you know you're going to buy the context. So first of all, you wait for the prices to get in the context. The way you're going to do it is you're going to set alerts. So I'm not going to be able to do it in a replay mode. All right, but I'm going to show you how to do it. So basically you set an alert. You wait for prices to get in there. Okay, so bing, alert is triggering. Next thing you do, you will put an alert in here for the double sine wave and momentum signal. All right, for now you just got sine wave. Okay, you're trading at a Fibonacci level, so it's good. All right, but you're waiting for a momentum confirmation before putting the trade. Okay. All right, you've been rejecting the scalping area. All right. Oh, triggering momentum. Great. You're trading at a Fibonacci level. That's good. I'd say go in here. Right now is a perfect timing. So you get your trade. You take your trade. You define your risk management. I don't know. You can use the Fibonacci. So you'd say, for example, you're buying in here. Let's do it real quick. Okay. Real simple. Minimum risk management. Low risk, you put your stop loss below the next Fibonacci level. So this is where you put a stop loss. 2-minute actual working. Next option, either you put a market taking profit to pay for the stop loss in here, and you just get the fuck out. Option number 2, you set an alert on the trend channel. Okay, this trend channel is now going to be bearish. The problem is on the replay, it's not going to work out. Okay, as you can see, the replay is not updating correctly. That's the way it is. I don't know why it is. It's a bug from TradingView. But when you do replay on intraday charts and asking for over than daily data, it's not working fine. But in here, for example, the trend channel is going to have lowered in here. And what you'll do is basically set an alert on the trend channel. Whenever the price will reach out the trend channel's resistance, lower time frame traders will probably try to sell, so you're going to lock your gains. You're going to, for example, either partial taking profit or set the stop at break even or do some risk management. Okay? And step 3, when you've made the risk management, you let 50% of that trade running into the daily chart context. Okay? Are we doing it right? So now I'm going to show you how to set those alerts. Okay? So first things first, you're going to set SPX crossing, framework, and these are all the outputs. Okay, so trend support, trend resistance is the trend channel boundaries. Context support up and downs is going to set the boundaries of these areas. Okay, up is the upper part of the support area, down, okay. Resistance is the resistance part, up and down as well. The alert label is something I want to talk about because I gave you a built-in algorithm that's going to highlight interesting prices. Okay, let me show up what this is. Okay, we're going to use the replay once again. Let's go here, for example. Okay, and you're going to see what the indicator, oh damn it, you're going to see what the indicator does. Okay, oh, you've got price, okay. The indicator is going to highlight the fact that you are trading near interesting prices. Those prices are trend channel, so you're not going to trade them. You're not going to take the trade entry on the daily chart. You're going to take the trade entry on the 2-hour chart, but you're going to take and spare half of that trade for daily context as well, because the signal I've been showing into the daily chart also. Okay, it really is important in there. This is how you're going to make multi-time frame trades. When both trend, when you're going to have two time frames giving bullish signals in the same area in the same time, you're going to be able to extend the trades goals. So you're going to trade in 2 hours, you're going to manage your risk in 2 hours, but you need to let 50% of that trade running for the daily context. Okay, and the daily money management is going to be made at the daily trend channel, which is far from now. Okay, so when you're buying in here, you're probably going to let the 50% open until still nothing, 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 nothing in here. Where you've got price okay is where you fucking take the trade out. So on that trade, you probably bought, secure the trades in 2 hour chart and let it go until then on the daily chart. All right. So really great trading here. Obviously was great reward for a very low risk entry. Okay. So alert system, we're going to finish this one. I'm going to explain. So the label is going to need a different kind of alert. Okay, when you want to trigger alerts on those labels, you're going to do this. You're going to use Pro Framework as an input and no longer the SPX. You're going to select alert label and you're going to set this greater than, and you pick any value that is above 0 and below 1. So let's say, for example, 0.9 is going to work just fine. And for example, in here, you're going to be alerted anytime you've got interesting prices highlighted by an indicator, both bullish and bearish, but anytime you've got interesting prices on the daily chart of SPX. All right, you can set these alert to be open-ended if you've got a pro accounts on TradingView. You set on per bear close not to get alerted every time, okay? But that's how it is. And how fucking simple is this? Now you can safely trade the SPX, not even needing to have a look at the charts day by day. All right, you're gonna know when something interesting shows up. You can say greater than, or you can say you can set crossing up or moving up percent. Both are working. The problem is, and I'm going to show you this because that's important. Okay, because you've got this final option, which is show historical alerts. It's going to tell you where prices were highlighted to be interestingly bearish or interestingly bullish, where basically you've got price okay blue or red. Okay, it's going to show you how it was historically. And you'll see it's going to alert a lot, meaning all those candles will ring the bell day after day. So you don't want to be alerted all that time. What you want to be alerted on is simply when it switches from neutral to bullish or neutral to bearish, okay? And the way you'll do this is by setting it this way. You're not going to use crossing or crossing up. It works, but apparently some users have been finding some flus out there. You're going to use moving up percent. Okay, and you're going to set it at the minimum. You're going to say moving up 0.01% in one bar. Okay, and it's basically going to give you the alert whenever the indicator changes its state. When it's going from nothing to price okay, and simply this. It's going to show you much fewer alerts. Okay, now how to alert yourself when you're getting yourself to cross a boundary. So for example, you're in here and you want to wait for the prices to go there. You're simply going to set prices crossing. You're going to select framework, select the outcome, select the output. So you're going to have context support up. You want to know whenever the prices are reaching at the top entry of that support. So you're doing this, context support up. You select if you want bar close or just touching the prices. You can create the alert and you're fine. Let's say, for example, you want to set alerts on Fibonacci levels. That works just fine as well. You can select any input available. You want alerts on the 50%, okay? You can do it as well. All right? That's how you're going to use this indicator. I hope you guys will like this one. Obviously, if you have some suggestions, some feedbacks, even some critics, I'm really fully listening to you guys. So you can put comments down there. I'm going to watch out for them. You can use the Discord to send some feedbacks to the moderators or anything like that. They're going to forward it to me if it matters. And thank you guys once again for listening, for using the indicators, and helping each other to get better in the Discord. And thank once again to those who are taking from their personal time to help other users right in Discord. You're really rocking it, guys. I couldn't make it without you. I remind you that this is a single person job, so it really is an enormous job just for myself, and handling all those users without you wouldn't be a possibility. So thank you once again, and I hope that more and more of you guys will be like that. Sharing is the best way to learn. When you've learned something, making sure that you make someone learn it as well, it's going to make you a strong conviction. It's going to strengthen your conviction and getting you even better at trading. You want to go faster. Okay, everyone wants to learn faster today. I think that's the way. You want to know how fast you can learn. It's not by gathering too many informations here and there all over the web. No, you want to learn faster. There's just one single way to do it. Share even more with other users. That's the best way ever. Bye guys, and see you later. I hope you're going to have a great Friday, Black Friday, and I'm going to see you again on Monday.